Hello guys, welcome back again to my YouTube channel. This is Pips Institute channel. I'm so happy to be here once again. Yes, today I'll be doing a video on break of structure and change of character. I will be speaking about what break of structure is and what change of character is and how to identify break of structure and change of character. Okay, so that being said, let's start without wasting any of our time. Okay, what is break of structure? Uh, Actually, break of structure just have to do with the structure of the market being broken to a continuation trend. For a continuation trend. Why change of character has to do with a changing or a reverse in the market structure, which causes a change of trend. So in other words, we can say that a break of structure helps us to signify a continuation, why change of character simply means helps us to signify reversals. So when you get a reversal, that means definitely there's a change of character. And when you have a continuation, definitely there's going to be a break of structure. I hope I'm not missing you out here. Let's just now we want to know that break of structure happens for a continuation. Why change of character happens for a reversal. So let's do this, for example. So let's assume the market is moving up. We're in a bullish phase. In a bullish phase. What's wrong with this? In a bullish phase, right? The market is giving us some higher high. Pardon my drawing, I just wanted to feel so perfect. The market is giving us an higher high, right? So you can see this is an higher high. This is a bullish phase. Okay, so where is a break of structure here? Actually, this is a break of structure. This is a break of structure. This is a break of structure. It is different from other block. This is a break of structure. Now, they are actually different from other block. They're not other block. They are We are very, very different from other block. So they're actually different from other block. Now, you can see that what the market did was this. The market moves up, then comes back. Here is a structure. Around this level, there's a structure here. Okay, there's a structure at this level over here, right here. There's a structure here that was formed. Then the market moves up and broke this structure that was formed over here. So once the market broke this structure over here, now we are expecting a continuation because the market broke the structure. Then what we expect is that the market should come and retest this structure over here. Then we are going to look for a sell. So what the market did was that, I mean, buy rather, the market then come down, then comes back to retest this structure over here. You can see when you trace it, it's still over here. Then you want to enter a buy here, and then you want to expect or anticipate a continuation. And this was exactly what the market did. Then comes back again. There was a structure here that was broken by this. Look at it, breaks that structure. So the structure here over here was broken. Then the market comes back to retest it. Then it moves up again. There was a structure that was formed here also, which was also broken. Then we are expecting to what a retest. Then we see a continuation. You know what I'm saying? So a break of structure is always a continuation pattern. So when you see a break of structure, you want to trade in a continuation pattern, not just you're not looking at trading. I mean, in another pattern, and this is where I I I have a problem with some traders. So what they want to do is that you want to trade a continuation pattern. Then what you do is that because the market is on a bullish phase, you want to hop up in because of fear of missing out. Then you enter even right at the region where the buyers are in the market. It's so wrong, very, very wrong, because when you enter at that kind of price level, you are buying high. But you want to, even if you missed out from the initial move, but yet you want to enter at a discount price, whereby when you enter, it will be so easy for you to 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 make some decent profits. Okay, I get what I'm saying. So what you want to do is that you want to wait for the structure to break. Like, let's assume you're unable to cash this move from here. You didn't cash it here. You're unable to cash it here, but then the market was around this level, and then it was a bullish candlestick we are seeing. It is just improper. It is not wise. It is stupid. Permit me to use that word. For you to say that you want to buy from the buyers. Who does that in the real life market? Nobody does that. You want to you want to buy from the sellers, from those that are willing to sell, and then you want to sell to the buyers. Are you know what I'm saying? So this is the logic of trading. When you begin to think trading like the way you buy stuffs in the market, then probably you are going to have an edge in this business. But when you are doing it the wrong way, you cannot expect to get the right results. So you don't want to see bunch of buyers in the market, and then at the long run you want to be one of those bunch of buyers. Rather, I mean, and they're not going. You want to buy from those bunch of buyers. It is not wise enough. What you want to do is that you want to buy from sellers, that is those that are willing to sell. Because if you want to buy from buyers that they want to buy more, they're not looking at buying. I mean, they're not looking at selling. Then the only way you can compel them to want to buy, I mean, to buy from them, is they would want to sell at a very, very high price. And that would be, that's going to make you a bad businessman or a businesswoman. Because how would you want to buy from 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 somebody that is selling so much higher? You want to buy from those that are willing to sell low. So what you know is that you want to wait for a discount price for a retracement. Again, I'm saying the SMC, we call it mitigation. That is, you you want it to mitigate this area of of structure that was broken over here. This area of structure was broken over here, and then before you could buy, then look at the market came back here, then did what? Comes back to what? To retest this level over here. So the market retested. So it's around this point, this zone. Once it retests this your box that forms the break of structure. Are you know what I'm saying? Once it retests it, or the breaker block, whatever you call it, then you want to buy from here. And the same thing also goes for the sell. The same thing also goes for the sell. The same thing also goes for the sell. You don't want to sell to the sellers. How are you? You want to sell to those who are willing to what? To buy. You are, you are waiting for the buyers to set in before you buy. I mean, before you sell, so that it's going to balance the whole equation. You are not forcing the market, and the market is not forcing you. You are not moving ahead of the market, and the market isn't moving ahead of you. I get what I'm saying. So the same thing is applicable to the sellers. You want to sell to those who are willing to what? To sell to you. At that point, you're going to get a good price. That's when you're going to get a good price. This is a break of structure. This is a break of structure. This is a break of structure. This is a break of structure over here too. So here is a break of structure. And you want to sell to the, you want to buy to the from the sellers, and you want to sell to the buyers. It's as simple as that. It's a simple arithmetic and a simple logic. When you see this as a normal trading, your day trading, you have kind of headway in this. Now look at what the market is doing for us over here. The market is moving down, moves up, then moves down. This is a break of structure. The structure here was broken, then comes back to retest. If you missed it over here, you want to get it around here. Then you are waiting for what? For the buyers to be in control. Then you sell from this region to where? To the seller, because to the buyers that are going to buy. I want to buy so stuff, then you sell to them. So you want to enter at a price that really suits you. You don't want to sell to the sellers that are not willing to sell. You know what I'm saying? So that's basically what break of structure really is. Break of structure is actually means a continuation, and then it occurs. Break of structure occurs at the mid point of trading. Why change of character occurs at the end of a trend. So let's look at change of character now. So we can then look at some live examples. Okay, let me make use of this also. Now, Then the market moves down here. Then moves up. Then moves down. Now, this is what I call change of character. This is change of character over here. Hold on. And this is change of character over here. This is change of character. This is change of character over here. Okay. This is a change of character. How is this change of character? It signifies, look, if you should notice this, you would notice that this is this is an head and shoulder pattern, right? This is an head and shoulder pattern. And oftentimes, head and shoulder pattern always signifies a what? A reversal, isn't it? So it shows that this trend that you saw starting from here to this around this area actually comes to an end, is about to come to an end. Then you begin to see, then the market gets here, then comes back to what? To retest this break of structure. You understand? Then the market moves up again to retest this break of structure. You know what I'm saying? The market comes back and what? And it's actually broke this structure over here. Then once it breaks this last structure over here, then we have a change of character. Then the market comes back down, then comes back to retest this level that was broken, this structure that was broken, then comes back down, and we have our change of character. That is, a change of character actually means that the trend has changed from a bullish trend into a bearish trend. So what we're expecting is that we're expecting that the market should keep on giving us something like this, then keep on giving us something like this, the lower low, because we are now at the face of what? Of a change of character. Now, change of character always occurs at the end of a trend. Now, this is the end of the trend, and then you can see that a market formation forming, which signifies a reversal and head and shoulder. For those of you that trades patterns, you know the implication of seeing a head and shoulder in a trendy market, in a bullish market. You understand that it actually signifies a change of trend. And so that's what market FMC calls change of character. So you want to allow it to break this structure over here, then comes back to the test. So at this level, you want to enter, then you want to keep on selling. So the same thing also goes for the sell. So at this point, we see something like this. Then want to see something like this. Then something like this. Then something like this. Then want to say something like this for me. Then this is a break. This is a change of character because the market has actually changed its direction. Now, what is so? As you can see, that this is actually an head and shoulder pattern. An head and shoulder pattern. So what you want to see here is that the market broke this level over here, comes back right here, moves up, then was unable to, it comes back to retrace this structure over here, then moves down, then broke through this structure, this BOS, and after breaking through, it comes out what? It comes back to what? To retest it. It comes back to retest it. So we can actually say this is a change of character. This is a change of character. So this is a change of character. And then we expect the market to keep on giving us a lower low, a lower low, a lower low, a lower low, and until it keeps on moving down and down and down and down, and down, like a lower low, a lower low, a lower low, a lower low. So this actually, it's anytime you see a change of character, it always signifies what? Reversal. Why a break of structure can always occur at the mid-level of a trend, and it will only give you opportunity to upend. It's going to give you opportunity to buy. I mean, to either buy in the same direction. But what's one of this that you don't want to just buy like that. You want to buy at a discount price and at a premium. You want to rather you want to buy at a discount price, and you want to sell at a premium price. I get what I'm saying. So I think I have explained that. So you now understand. You now know the difference between a change of character and a break of structure. So if you're looking for a change of trend, you can see that over here, this inverse head and shoulder. So it actually occurs at what? At the end of what? Of a trend. So when you see something like this, when you see an inverse head and shoulder, then you know that there's about to be a change of character. Then what you want to do is that you want to wait for those characters to be fully broken, this level over here to break. So after breaking, then you expect it to what? To come back down and retest. And at this point, you want to what? You want to buy. And same thing with this place. You want it to what? To retest this level. I mean, to break this structure. It broke the structure, comes back to retest. Then you see what? A continuation on what? A down move as created by the change of character. So that being said, I want us to go into the charts and and see examples of what we really mean by all this. Okay, guys, this is good. This is good on a 15-minute time frame. I want to see something. Okay, look at where the market is giving us an higher high, not so perfect though. This cursor is an higher high and a higher high. Then we have something like this. Then gold begins to what? To play out, to play in this range. Finally, we know that it's an high. It's an high. It's an high. It's still an high because it has not yet broken any significant structure over here. Still within the eye of the day. If you are so familiar from a personal student that trade with me, there are some ways that I look out for reversals apart from the this thing, apart from the inverse and shoulder and head and shoulder. Actually, I also look out for the BTMM pattern M formation, which is the M formation and the W formation. Okay. So what happened was that around this level, gold was giving us an higher high, an uptrend without any doubt. It's a clear uptrend. You can see it for yourself. So what you want to do is that do you look at selling or buying? Rather, we want to allow the market to give us its hand to show us the direction. So from what we can see here, this is a clear M. So sometimes you might see an M. This is a clear M. So the market just come back to what? To grab liquidity here. By next week, I will be making a video on liquidity grab so that we can understand liquidity grab and liquidity zone, because a lot of traders and a lot of YouTube people, trainers they usually make the mistakes of 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 thinking that liquidity is grab and liquidity zone, they are the same thing, and they are absolutely different. They most of them, probably ignorantly or knowingly to them, they actually teaching liquidity zone instead of teaching liquidity grab. So I'll be teaching liquidity grab and liquidity zone, giving you a distinct difference between them. Okay, so that being said, so this is an information that formed over here, right? I knew that from year to year, so I know that it was a good grab around this region, but I was I knew that I was looking for a sell over here. I took gold. My take profit is around this level over here, and so what I did was this. Okay, what I did was this. I took gold at around this level, then it sold, right? But what really made me take the sell was the fact that I saw an information, right? I've shown you that. Then the next thing is there was a break, there was a change of character. There was a change of character. Look at this was the last. Excuse me if I'm correct. Okay, let me clear it. This was the last bullish candle over here. This was that bullish candle over here. So ideally, you expect gold to break this level. Then once gold should break this level, for those of you that know how to use your break and retest strategy, then you're expecting the retest over to this zone and then selling. You can continue selling. So I'm expecting it to break this level and come forth to this level at my TP region. So this was a clear change of character for me on the 15-minute time frame. Though I actually entered here because of my other confluences from the higher time frame. I knew that gold was going to go for a sell, and then I actually saw what I was looking for on the 15-minute time frame. But this was just for those of you that don't know how to get it at around this region. Then you can just wait for it to break this structure over here. That is the buy structure that has been forming for a long time. This is another structure over here on the 15-minute time frame. Look at the structure over here. So when you when you look at this structure, it corresponds with this structure over here. It corresponds with this structure. Am I correct? So this structure over here is corresponds to this structure, which is the last bearish candle. So it corresponds to this structure over here. So we can expect that, okay, we want to go to break this structure. Then we are expecting a retest. We are expecting a retest to this zone. Let me clear. So we are expecting a retest to this structure over here, right? So to this structure over here, then the continuation. Actually, go did that exactly. Sometimes you might not, you don't have to actually get. Sometimes the market will just break forth, then might just go up, then come back. Sometimes if you just move, touch this level, then continue moving down. Okay, it depends, but actually it was a break and retest, so it actually did what we expected. So it was a change of character over here. We saw a change of character, a clear change of character over here. It was a clear change of character. We cannot deny it. It was so visible. It was so visible. So you could see a change of character over here. Then you want to what? You want to sell good until further notice when the character change. Actually, my TP is around here. I had to hold the trade. Ideally, I don't hold trade over the weekend, but this was a short trade, so I had to hold it over here. So I expect my TP to be around this place, and I'm expecting it to hit by Monday Asian session opening. Okay, so that being said about gold, and let's look out for a buy pattern. For a buy pattern. So guys, this is USD DPY on the 1 hour time frame. This is a clear bullish, bearish formation. This is a clear bearish formation without look at the lower low. And then as market was forming a lower low, then when it got to this level, we are seeing a let me just drag out to it. Okay. Yes, you are seeing a lower low, right? If you are with me, a lower low. Then the market comes back here, then moves up. Now this is a structure. Then moves up. This was a structure, right? So the market comes back, then moves up. As it moves up, it broke this structure, isn't it? This is a break of structure. This is a structure. This is a structure. So the market moved past this level, then comes back to retest this same structure. As you can see, when the market got here, you can see the pins. This use of it that trade candlestick. What does this mean? These are reversal pattern, right? So the market comes back to retest this structure that was broken. This is a clear change of character. If it is not, I don't know what else to call it. This is a clear change of character. So the ideal change from where from a bearish bias to what a bullish bias. So I don't know what time frame you want to trade like this, then you've been waiting, then all of a sudden you saw a clear the market moves down. But ideally, as market moves down over here, you expect something like okay, moves up a bit, then continue down, right? But the market just moves down, moves up, then keeps on moving up, then keeps on moving up. Then the last bullish bearish candlestick that supported the moves down to this level was then broken. So that means it broke that structure. So because it breaks that structure, it causes a change of character because it broke this BOS, this structure over here. Then it causes what? A change of character. Then we see market move down. Then it moves down to what? To retest. You knew that okay, as this structure, as this BOS was broken or is already broken, you knew that you were going to go for a buy. So, but you don't just want to buy at the top over here. Come on, that would be ridiculous of you. You want to buy at the discount price when there are a lot of when there are willing sellers to sell to you. You want to buy around this place, but rather you allowed it to come and retrace at this level or to retest or to mitigate, like SMC we say, to mitigate this level. So immediately it mitigated this level, then you had your opportunity of entering, and your stop loss should be around this place. Then what you had the opportunity to buy this all along. And if you want to look at it carefully, you can see this is also a reverse head and shoulder. You might not see it clearly, but for me, I can see it. This is a reverse head and shoulder. You might not see it clearly, but for me, I can see it. So what is this? So this is a reverse head and shoulder in a microscopic view. When you look at it, it's a reverse head and shoulder. So it signifies a what? A reversal. So that is that on market structure. I mean, on break of structure and change of character. Now you know the difference between break of structure, and now you know the difference between break of structure and change of character. Then you know what you want to do when you are in the mid trade, in the mid range, in the trending market, and then you want to follow the trend. You know that what you're looking for out for is what is a break of structure. But if you want to counter trend, then what you're looking out for is what is a change of character that's going to signify buy for you. So that is that on this video. I hope you like this video. I hope you enjoyed it. If you know you like this video, kindly give me a thumb up, and then make sure you subscribe to this YouTube channel so that you can enjoy educative and informative trading content each time I upload the content. Just make sure you turn on the notification bell so you can get notified each time I upload new content. By by God's grace, by next week, I'm going to be doing I'm going to be making another video on liquidity. So you want to stick out around for that. I'll be making another video on liquidity, and that liquidity I'm going to be speaking to you extensively on how to understand liquidity grab and liquidity zone, on like how the rest are teaching it, so that you don't mix it up and then you don't take liquidity grab for liquidity zone and liquidity zone for liquidity grab. And this is what is causing a lot of traders to trade the wrong way, because most YouTubers that really have a live account have misinterpreted these two concepts, and they've exchanged it together. Even they even see them as similar or the same, though they may be similar in some ways, but they are yet very, very different and distinct. So you want to stick out to this, to my YouTube channel, to learn more about the upcoming content. Bye.